Good afternoon, ladies and gentlemen. Welcome back on Business Today Television with our special episode on Market Gurus. We are doing all that we can to give you quality advice at this point of time after an 8-month correction, after a 6-month correction which has pushed the market to lows of June. These are opportune movements where you can put in money or put in at least a small part of your savings into equity investments, and where to do that is a group of experts that are guiding us. Our guest today is Mr. Amit Goel, co-founder and Chief Global Strategist at Pace 360. Namaste Amit ji, and a very warm welcome to you, sir.
Namaste,
We've
Shailendra.
been
So much.
waiting for your presence to decode sentiment on Dalal Street. The Nifty has been correcting since September and is down about 16-17%. Pains in mid-cap and small-cap indices have exceeded 25%. What to talk of stocks? Some of them have corrected 50%. At this stage, Amitji, how are you deciphering sentiment on Dalal Street? Is the pain over? And how do you see the next 3 months?
Thank you, Shail. So, my understanding is, Shail, that the sentiment, at least till 2 days back, so let's say till Monday or Tuesday, was one of the worst sentiments on the Lal Street and among investors that I have seen in my 30-year career. And there have been only very few instances when I perceived the same kind of disgust and the same kind of disappointment and a near capitulation by all kinds of bulls. One was when Ketan Parikh's scam broke out in 2001. Another one was GFC, October of 2008. And if I go back to the last century, I would say that when Harshad Mehta's scam broke out, I saw a similar kind of sentiment. So it's been a very a rare set of events that have happened in the Indian market, and our performance has obviously been extremely bad, not just in the absolute sense, but also relative to our history, also relative to emerging markets, also relative to emerging markets ex China, and of course, relative to US and European markets. So, the number of records which have been set in the last 5 months is like more than 20. And I can, if I start rattling them, it's going to take me a very long time, but I can safely tell you that each one of those records are in their own capacity a 1 sigma or a 2 sigma event, and some of them are like a 3 sigma event, and all of them have happened together in the last 5.5 months. So that makes it like a 6 sigma event, which is a very rare thing. It would happen once in many decades. So that's the kind of sentiment which we had on the Lal Street till about a couple of days back. We've seen a rally in the last 2 days, and my understanding is that this rally, unlike some of the previous rallies that you saw one rally between January end and February beginning. We also saw a rally between, let's say, January of 14th to about, in the next few days. We saw a rally in December. But unlike any one of the rallies that we have seen in the previous 3 months, I personally believe that this particular rally, which has started just 2 days back, this seems to have legs. It seems to be sustainable, durable, and I think we are probably in a good space for at least the next 2 to 3 months. And I see a very substantial bounce back in Indian equities, led by large caps, but also accompanied
Right, sir.
by small and mid caps.
Right. Uh, Amitji, from your conversation, I would presume that the worst is over.
Absolutely. I'm of the opinion that the worst is over. And it's just been 2 days since the rally started. So I think we have a long way to go.
Fair point. So that's a bit of a relief. I'm sure for your own mental makeup as an equity strategist, as also a deployer of a lot of strategies that make money in the short term. Now what? Where do you see the markets? Last time we had a conversation, you were deeply into PSU stocks. Some of them have been taken to the cleaners. Uh, how how are you feeling when you look at your portfolio at this point of time, and what are the changes, if any, that you are making at this point of time? Are you exiting some positions? Are you adding fresh ones? What's the daily routine?
Sure, absolutely, Shail. So, yes, we have a portfolio which is now nearly fully invested. So, we are like 96, 97% in equities, which you can imagine for a multi-asset fund is a very, very bold and a very aggressive call. So, that's where we are at the moment. This is one. Secondly, yes, we have a lot of PSU stocks and we kept buying them on the way down. So I think the saving grace was that we started buying them in October, but we bought them all the way down to, let's say, in the last few days. So because of which we are sitting on relatively comfortable averages, and I'm very happy to report to you that our PSU stocks portfolio has outperformed the large caps, the small caps, and the mid caps over the last 3 to 4 days. And BPCL and some of the oil marketing companies are up double digits in the last few days. Concor is up almost 10%. HAL is up 10%. So Bhatnagar gas is now very, very close to multi-week highs. So I think the PSU portfolio is doing well. But of course, apart from PSUs, we've got a lot of private sector stocks as well, like in banking, like in conglomerate space, particularly Reliance Industries and many others. And we are feeling very good about the portfolio, not just the PSU part, but the private sector part. And I think uh, over the next 2 months, I see a very strong rally developing, particularly in the PSUs because they have been beaten down the maximum. But also, of course, in privately owned companies and mid caps and small caps. But mid and small caps, I would still urge caution, and I would still say that try and have a small and mid cap portfolio which doesn't have a P ratio of 35, 40, or 50 or higher. Focus on quality stocks which have a P ratio of, let's say, below 25 or 30, and there are still plenty of those available in the market. And I think those are the ones which will probably do better than some of those which are still very exorbitantly priced.
Okay, so here is what I can understand: a very strong rally developing in the next 2 months. That's the crux of the whole discussion. One is that.
Absolutely.
Two, PSUs, which were very, very reasonably priced. The names that you have mentioned, Concor, HAL, Bhatnagar Gas, BPCL. I remember IGL. I remember one more stock that you had mentioned from the PSU basket. Overall, how many PSU stocks do you own, Mr. Goel?
We actually, I won't have the precise number offhand with me, but I can safely tell you that PSU stocks, which obviously includes PSU banks as well. So PSU stocks and PSU banks put together would be nearly 65%, 65 to 68% of our portfolio. And the reason why we got into many of those PSU stocks was their relatively lower valuations, and we don't have those PSU stocks which are valued at where the P ratio is like 50 or 100. So we have PSU stocks where the valuations are like almost in single digits. So my PSU portfolio as a whole has a average blended P ratio of close to 9.5 or 9.75. So that's where we are. And we are very, very positive on this portfolio. Many of the PSU stocks actually started coming down post July, while the market, of course, peaked out on 26th, 27th of September. So the PSU stocks correction in some ways is older than the correction that started in Nifty or in small cap and mid cap. So this makes us believe that we are in a very, very good space, and it makes us believe that the correction has run its course, and we are not talking about them reaching all-time highs anytime soon. That's not what we are talking about. We are talking about a massive retracement, a reversion to the mean rally. They are probably not going to go back to their highs, most of them, but they are also not going to remain where they are at the moment, which is close to their lows. So somewhere in between they will probably reach, and that would be phenomenal enough for our overall portfolio to make a substantial profit on our investments.
You know, Anilji, I have two feelings. One, that you are in love with PSUs, which may not be such a bad thing given the valuations. And two, forget all time highs. If the portfolio reserves, reverts 10, 12, 15% to the mean, the hair that you lost in the last 3, 4 months, they may grow back.
I didn't just lose the hair. I think, rather than having 70% gray hair, now I have 80% gray hair, and I can't do much about that because I don't use any dye.
Okay. With that background in mind, let's now shift focus away from PSUs and the fact that in 2 months from now, we might just see a very, very decent uptick in prices. Amit ji, now lead us through mid caps and small caps. You are primarily a value buyer. I have known you for now 2.5 decades. You yourself say the PE, the average PE of your PSU portfolio is half that of Nifty, 9.5, 9.75.
Yeah.
Now, in mid caps, are there values to be bought? In small caps, do you see spaces where value has emerged, given that you watch value very closely?
Shell, I think that's a brilliant question, and I must point out that the calendar year 25 has started with a big bang for value stocks. You know that calendar years 23 and 24, and I'm not talking about globally. I'm not talking about India. Globally, 23 and 24 were years which completely belong to the growth, completely belong to the mega caps. You would be very happy to know that in the calendar year 25, value is trouncing growth by a very, very massive margin all over the world, which is also the reason why European markets have done so well compared to US, because US has a lot of growth stocks in their key indices, while Europe has lot many more value stocks in their indices. So one of the reasons why Europe is beating US benchmarks by almost double digits at this point is because of this reason as well. So my sense is that not just in India, globally, and that applies now to India as well, we should look forward to a value-driven rally and not a growth-driven rally. So I think the time for buying stocks at 100p ratios or more or maybe slightly less, I think that time has now gone. And I don't see a big rally in those kind of stocks. They would rally, of course, but I don't see them reaching anywhere close to their glory of last year. So this is one. Secondly, now coming to your small cap and mid cap thing. So my sense is that, look, small and mid cap space overall, I think they may tend to underperform the large cap space, because the way I see it, a lot of the mutual fund SIPs, if I talk about the January data shell, then you know that small and mid cap funds got an allocation of more than 10,000 crores, while large cap dedicated funds got an allocation of only 3,000 crores. Of course, a lot of money then went to flexi cap and multi caps and then hybrid funds, which also have many, a large cap bias. But what I'm saying is that our SIP money has had a massive bias towards small cap and mid cap over the last many, many months. And I see that bias going away. So my sense is that large caps are going to do better than small and mid cap. But having said that, within the small and mid cap space, those stocks which are still at reasonable valuations, where you have where the company is profitable, it has had a track record of generating profits. The company is growing, maybe not, no, no, maybe not growing gangbusters, but at least the company is growing and reasonably good corporate governance. My sense is that those small cap and mid cap stocks will now do well at the expense of expense of those which have obnoxious P ratios or which have questionable financials or questionable corporate governance. So I think those things will now come to the fore. Shell, it's back to the basics, it's back to value, back to the basics, back to the strong balance sheet, strong financials, and corporate governance. If you take cognizance of all these factors, I think the next 2 months belong to you.
Okay. Now, a slightly difficult question to answer. It requires a lot of foresight. Are you in a value trap when 60 to 65% of your portfolio is into PSUs? They've had a dramatic run over the last, forget last 1 year, but previous to that, 4 years have been fantastic. Chances that your fund holders and your clients might be very angry 6 months from now, what is the probability?
Shell, that's a very good question. I'm so glad that you asked me. So, in some ways, you're right uh, that it did for some time appear to be a value trap. But I must point out here that many of these stocks, I have been investing in them for now 2.5 decades. So we have had a long history of trading PSU stocks over last 25 years, and we have seen a lot of classic boom and busts in PSU stocks. And who would know that better than you? You know that during Vajpayee ji's time, there was a massive rally in 2004-5 in PSU stocks, and then which completely fizzled out for the next many years. So PSU stocks is a classic boom and bust play in the Indian market. And I think we've seen one such bust. And we had the opportunity to buy all the way down. So, for example, if I talk about BPCL, we probably started buying it when it was like 320s, and we bought all the way down to 230s. So now our average is so comfortable. And please also bear in mind, Shell, that the dividend yield is just mouth watering in many of these PSU stocks. So BPCL, for example, the dividend yield at today's prices is close to 4%. They just give a dividend of 5 rupees, which at today's prices is like 2%. So what I'm saying is that A, because we've been trading in, investing in them for 25 years, and B, because they have a proven profit track record, their dividend yield is very high, their P ratios are very reasonable, and the next few months, in my opinion, they belong to value. And what other part of the Indian market would give you the kind of value which today many of these PSU stocks give? And I am not talking about the PSU stocks which have hogged the limelight over the last 1, 2, 3 years. I'm talking about many of them. We have a higher exposure in those ones which have been around for decades and decades, and we have seen a lot of up cycles and down cycles in them. So my sense is that the down cycle was pretty intense. It happened in a period of about 6, 7 months, starting from July onwards. And my sense is that we are close to the end of that bust cycle. And over the next few months, they will give us a lot of value. And I must also point out that it's not necessary that we would be holding all of them in the existing weightage for long term. It is quite likely that once we see a massive value coming back to them, it is quite possible that we may reduce our weightage or maybe even exit some of them in profit over the next few months.
Yes, fair point. I don't think so. We are in a zone where the market PE is going to expand. We are in a probably a space where buying the right stock at the right price is a little more relevant, because no longer does the bull market exist where you will get momentum and you will exit the stock maybe 90% higher in the span of 3 months. Those lovely days are gone. Let's
I totally agree.
let's just shift focus to the pharma space, the IT space, maybe private banking, maybe NBFCs. In your portfolio, are there any spaces for pharma and IT? IT in particular, it's been thrashed over the last 3 weeks or so.
So, Shell, we do not have any pharma or IT or even FMCG stock in our portfolio, and because not because of any other reason, but we actually did not find too much value there, and plus many of these sectors are considered defensives. So we just had a feeling that many large fund managers may be taking some sort of shelter in those sectors because they are probably more scared of what's going to happen to the other high beta sectors. And we just thought that the high valuations and their defensive nature, and plus the fact that many fund managers were seeking shelter in them, thereby artificially creating demand in a bear market or in a falling market. Those factors kept us away from those sectors. And I must point out to you, Shell, that recently your IT index has gone down 14 out of 15 days. And this is the worst performance of the IT index in terms of number of down days in basically since inception of this fund, since inception of this index. So what I'm trying to say is that now, of course, they are pretty beaten down, and many of them are going to bounce back from here. I'm not saying that your TCS or your HCL Tech are going to go down further from here. I think they would go up from here. But my sense is that we'll get a better delta from some of the other value positions that we have. And many of the pharma and FMCG stocks, I hate to say that, but they are still not a bargain, even though they may have come down a lot. And FMCG index went down 15 out of 15 days, which is again an all-time record. So we've broken many of these records in even these sectors, but considering the valuations and other factors, we just decided to stay away.
Right. I'm sure this list of records is not something that you want them to be repeated ever in this lifetime. बहुत हो गया, 6 महीने बहुत दर्द सहा है. Especially the last 2 months have been terrible. Be that as it may, you know, if such things don't happen, then we don't get this opportunity to make delta with alpha. So these are rare instances, and we should be thankful that we've survived. Now, the other theme, Amit, is gold. You've been an allocator of assets over time, and you buy pain and you sell froth. Is gold in froth?
I think so, Shell. Gold, I think, when we so aggressively, when we bought gold in October of 23, and gold was at that time $1,815, and on MCX it was close to 57,000 rupees. That's when we gave the most bullish call on gold in quite some time. Since that point, we've rallied by more than 55%. Rather, it's now close to 60%. And in rupee terms, also the rally is very, very substantial. My sense is, Shell, that there is now some froth in it. And for the next few months, this asset class may underperform. And I think we'll get both. We'll get a price correction, and we'll get a time correction as well. I'm absolutely sure that it's still a great asset class for the next 5 years, Shell. But I'm not buying it at the moment. We did book our profits over the last few months. In fact, most of the profits we booked in October only, and the remaining profits we booked in the last few weeks. And we will not buy it unless and until we are convinced that the froth has gone away. And it's going to take time. It's going to take a level correction and a time correction for us to get bullish on gold again. And I must point out to you that this is one asset class where we have been investing now for almost 25 years. And it's been a happy hunting ground for us. We've been very fortunate to have invested in gold at some amazing times. And I just hope that we'll get one such opportunity within the next 6 to 8 months, because this is still a great long-term asset class.
Okay. Amit, my final 2 questions to you. Given the rapid pace of decline and an equally rapid, if not faster pace in correcting valuations, at this stage, are you sleeping well?
Shell, I was not sleeping so well, let's say 3, 4 days back. It was kind of affecting us because it just went on to an extreme, which we didn't fathom. I must say, till a few weeks or a couple of months back. But I would point out that we were very fortunate that we still had some liquidity available in our portfolios, and we have utilized that to literally, buy the last dip as well. And in fact, we have bought as recently as yesterday. We haven't bought much today, but we bought as recently as yesterday. So while we were having a bit of, let's say, trouble getting our head around and getting the peace of mind as to what's happening, but we did, in any case, take advantage of the opportunity, and we just kept putting in more money over the last few days, and we've actually put in substantial amount of money in the last 3 to 4 weeks, and I'm now feeling very good about it. And I think we are now in a good space. And I would want to point out one thing, Shell. You would recall that in September we had come up with a piece that in Indian markets, dumb money is giving exit to the smartest money, which includes the strategic investors and the pre-investors and the MNC promoters and the promoters, the Indian promoters as well. And we said that this story is not going to end well for Indian investors. This was September, when he was at 26,000, and we were even quoted by The Economist. And I must say that the wheel has turned full circle, Shell. And just like the Indian dumb money was giving exit to the smartest players in the world in September and early October, I think now it is the dumb FII money which is exiting, irrespective of the valuations, irrespective of the macros, irrespective of dollar index, the falling US bond yields, irrespective of the fact that we've had a cyclical bounce back in the last 3-4 months, irrespective of the fact that this quarter's numbers are looking good, GST collections are good, irrespective of that, they are now giving entry to the smartest players on the Dalal Street. The wheel has turned full circle, and now I think the dumb FII money which is exiting and giving entry to the best and the smartest of players in India, I think this is not going to end well for these FIIs who have sold out in such huge, massive quantities last one.
Thank you so much, Amit. What a wonderful 30 minutes in trying to listen to your strategy to tap into this probably impending V-shaped recovery, and of course the buys in the PSU basket. Have a good time. Let's hope when we meet again 3-4 months later, and this is going to be that is going to be a better and more enjoyable meeting than this one.
Thank you so much, Shell.
Thank you so much, and have a nice evening.
Same to you.
That, ladies and gentlemen, was Mr. Amit Goel, global strategist for Pace 360. This is a Delhi-based investor which manages somewhere like 8,000 crore rupees. Much of it is prop, but they do an excellent job at buying value and selling froth. I hope you enjoyed the conversation. Please stay glued to Business Today Television. There's a lot that's happening on the other side of this break.
Furthering to Belgian Economic Mission delegation to India,